Welcome, my fellow attorneys, to the National Bankruptcy Academy video series. I'm your host, Robert Schaller, an attorney with over 34 years of experience and a registered certified public accountant. Today, we'll be discussing the Chapter 7 means test calculation that identifies the existence or not of a presumption of abuse with a line-by-line analysis with real-world commentary. I hope you enjoy the video. The Chapter 7 means test calculation is officially known as Official Form 122A-2. Chapter 7 means test calculation. This document is commonly referred to as the means test or Part 2 of the means test. Every Chapter 7 debtor must file the means test calculation when the debtor's annualized average monthly income exceeds the state's median annual income for households of the same size as the debtor's household. The debtor does not have to file the Chapter 7 means test calculation when the debtor's annualized average monthly income is less than the state's median annual income for households of the same size as the debtor's household. Therefore, the means test serves as a Chapter 7 gatekeeper. Any individual debtor who fails the means test will be denied Chapter 7 protection and will be forced to convert the case to Chapter 13 or some other chapter, or forego bankruptcy protections. Failing the means test creates a presumption of abuse that prevents the debtor from obtaining relief from debts under Chapter 7. A presumption of abuse is the basis for the Chapter 7 trustee or U.S. trustee to file a motion to dismiss the Chapter 7 bankruptcy case pursuant to 11 U.S.C. Section 707. A presumption of abuse does not mean the debtor is actually trying to abuse the bankruptcy system. Rather, the presumption simply means that the debtor is presumed to have enough income that the debtor should not be granted relief under Chapter 7. The debtor may overcome the presumption by showing special circumstances that reduce the debtor's income or increase the debtor's expenses. If the debtor cannot obtain relief under Chapter 7, the debtor may be able to continue under another chapter of the Bankruptcy Code and pay creditors over a period of time. The Statement of Means Test Calculation is one of the most confusing and therefore litigated documents that a debtor is required to file. The calculations on the means test reduce the debtor's income by living expenses and payments of certain debts, resulting in an amount available to pay other debts. If this amount is high enough, it will give rise to presumption of abuse. The confusion stems from the dichotomy between, quote, actual expenses and, quote, allowed expenses. Only allowed expenses are deducted from the debtor's annualized average monthly income, leaving intellectually confusing results. For example, a debtor may own two vehicles and have separate vehicle loans on each of the vehicles. The debtor's actual expenses would cause the debtor to deduct both these vehicle loan expenses from income to determine the debtor's ability to repay creditors. However, the means test only recognizes allowed expenses when determining a debtor's ability to repay creditors and allows an individual debtor to deduct only the allowed expense related to one vehicle and disregards the expense related to the second vehicle. Well, that should sound strange. Under these circumstances, a debtor's actual net income would be less than a debtor's allowed net income. By how much? By the amount of the disallowed second vehicle expense. Are you confused? The only way to understand it is to embrace the chaos, analyze the allowed expenses, read the case law, resolving litigation fights, and study the information in this course. The expense caps change periodically because they are set by the Internal Revenue Service. The expenses and their caps are located on the website of the United States Department of Justice. We will be reviewing the DOJ's website while completing the means test calculation for the fictitious couple George and Martha Washington. Now, let's turn our attention to this bankruptcy form with a line-by-line analysis with real-world commentary. I hope you enjoy the video. Now let's analyze the means test calculation form. At the very top of the form is the familiar box. This is the fill in this information box. And we know that we need to include the debtor's name, the debtor's spouse, and the United States bankruptcy court in which the petition was filed. So let's begin. The first debtor is George Washington. The second debtor is Martha Washington. And they filed the bankruptcy case in the United States Bankruptcy Court for the Eastern District of Virginia. So let's enter the district with the pull-down menu. Find the Eastern District of Virginia, and there it is. Let's click on it. The next box requires the debtor to identify the case number. Now over to the right, you'll see a box that says check the appropriate box as directed in lines 40 or 42. However, we have not completed lines 40 or 42, so we were going to leave this box blank, but I promise we'll come back to the box after we've completed lines 40 and 42. Below the box to the right is the familiar checkbox if this is an amended filing. If this is an amended means test calculation, then we check the box. However, in the case of George and Martha Washington, this is the original means test calculation, so it is not an amended filing, so I'm going to uncheck the box. Now, let's go down the form. The official title, Official Form 122A-2, Chapter 7 Means Test Calculation. Let's read the instructions. To fill out this form, you will need your completed copy of Chapter 7 statement of your current monthly income, Official Form 122A-1, and we have completed that in a separate course. Continuing on with the instructions. Be as complete and accurate as possible. If two married people are filing together, both are equally responsible for being accurate. If more space is needed, attach a separate sheet to this form. Include the line number to which the additional information applies. On the top of any additional pages, write your name and case number if known. So let's scroll down and see Part 1. Part 1 is titled, Determine Your Adjusted Income. Line 1 states, copy your total current monthly income, which is line 11 from Official Form 122A, which is your statement of current monthly income. And in a separate course, we have completed Official Form 122A1, and we know that line 11 is $10,066 for the Washingtons. So let's add that. Moving on to line 2, it says, did you fill out column B in Part 1 of Form 122A-1? And if you remember, column B is the spouse. And yes, we did, in fact, do that for Official Form 122A-1. So in the Official Form 122A-1, we did include Martha Washington's income in column 2. So we would check the box, yes. Now the subpoint of 2 says, if yes, is your spouse filing with you? And the answer to that in George and Martha Washington's case is yes. So we check that. And the directions say fill in 0 for the total on line 3. But before we get to line 3, notice the box above. And it says, is your spouse filing with you? If no, go to line 3. So in this particular case of George and Martha Washington, we are directed to fill in 0 for line 3. So let's do that, but let's explain what would happen if they did not file together. Now, remember we were directed to fill in 0 for line 3, so let's do that. But nonetheless, let's discuss line 3 in case you ever have a debtor that files separately without the spouse. So line 3 says, adjust your current monthly income by subtracting any part of your spouse's income not used to pay for household expenses of you or your dependents. Now, what does that actually mean? This is really an adjustment to income when a non-filing spouse has income, but is using that income for purposes other than the family household expenses. What would be the best example? Imagine a spouse, a non-filing spouse, had been divorced, and that non-filing spouse has alimony requirements to be paid to prior spouse or a child that is living with the prior spouse. In which case, that money that the non-filing debtor is paying to the ex-wife or the child of the ex-wife living with the ex-wife would not be available to pay in the Chapter 7 case. So therefore, the line 3 allows an adjustment to subtract that income. Let's give it an example. Say yes to line 3, and then fill in the information below. It says state each purpose for which the income was used. For example, the income is used to pay your spouse's tax debt or to support people other than you or your dependents. So let's put that in. alimony paid by the non-filing spouse, and let's just say it's $500. And child support paid by the non-filing spouse. Then the total would be $1,500. And the total $1,500 would be an adjustment from the current monthly income that we saw in the current monthly income statement of Form 122A-1. So that would reduce the amount of income, which would be helpful in terms of the debtor passing the means test. But in this particular case of George and Martha Washington, they filed a joint case, so therefore line 3 would be 0, so let's erase it. Uncheck the box and delete the adjustments. And the amount for line 3 is 0. Okay, let's move up to line 4. Line 4 requires the debtor to adjust the current monthly income. So that's subtracting the total on line 3 from line 1. And again, line 1 is the amount of current monthly income from official form 122A-1, and then subtracting the adjustment from line 3, in this case would be 0. So line 1 is $10,066, minus 0 is still $10,066. Now let's scroll down to part 2. Part 2 is titled Calculate Your Deductions from Your Income. The Internal Revenue Service issues national and local standards for certain expense amounts. Use these amounts to answer the questions in lines 6 through 15. To find the IRS standards, go online using the link specified in the separate instructions for this form. The information may also be available at the bankruptcy clerk's office. Well, I would not go to the bankruptcy clerk's office because you want to go to the clerk's office once these documents are completed. The better way to find the information is go to the United States Department of Justice's website and find the local and national standards. And we're going to do that in a little bit as we go through this form. So remember in part 2, the debtor does not use actual expenses that is incurred. Instead, the debtor uses these national and local standards to determine the amount of the expenses. Sometimes it makes no sense. You just have to file the form. Continuing on with the instructions, deduct the expense amounts set out in lines 6 through 15, regardless of your actual expense. In later parts of the form, you'll use some of your actual expenses if they are higher than the standards. Do not deduct any amounts that you subtracted from your spouse's income in line 3, and do not deduct any operating expenses that you subtracted from income in lines 5 and 6 of Form 122A-1, which is Statement of Current Monthly Income. If your expenses differ from month to month, enter the average expense. Whatever this part of the form refers to you, it means both you and your spouse if column B of Form 122A-1 is filled in, which is the case in the example of George and Martha Washington. So line 5. Line 5 requires the debtor to identify the number of people used in determining the debtor's deductions from income. And they have instructions that say, fill in the number of people who could be claimed as exemptions on your federal income tax return, plus the number of any additional dependents whom you support. This number may be different from the number of people in your household. So notice that the number of people that you will count on line 5 may not equal the number of exemptions on the federal income tax. I would argue that this form is more liberal than the federal income tax in the sense that the federal income tax would limit how many exemptions, whereas this line 5 could have the number of federal exemptions plus additional people that would not otherwise qualify under the federal income tax rules. In the case of George and Martha Washington, there are 4 people in the household. There's George Washington, Martha Washington, and 2 children, one aged 11 and one aged 14. So we're going to enter the number 4. Let's scroll down. The form says national standards. You must use the IRS national standards to answer questions in lines 6 and 7. So note that there's a difference between national and local standards. So the national standards, as the name suggests, would be the same numbers for everybody for the same household size, whereas the local standards are either local or regional, and those numbers would vary depending on where the debtors live. So let's look at line 6. Line 6 requires the debtor to identify food, clothing, and other items. Using the number of people you entered in line 5 and the IRS national standards, fill in the dollar amount for food, clothing, and other items. So now let's go look at the U.S. Department of Justice's website to determine the amount of money allowed as the national standard for food, clothing, and other items for a family of 4. Now we are visiting the website of the United States Department of Justice. And notice the URL www.justice.gov. Now we want to find the means test, so let's use the search this site box and add the phrase means test. So we find the search results. Now we're looking for the most